traded, so I'm looking at the NAS 100 on the daily time frame. So this is traded into a key level of resistance, this level here above these candles. This is tapping into, well, it hasn't quite moved into this level, but it has taken out the liquidity that's sitting above these highs here. All right, so that's been already tapped into. This is big liquidity, guy. We've got buy stops resting above these highs and these highs. So this is two specific targets that big money would be targeting basically. So they load up here. This is the accumulation, and then we get this expansion up into liquidity. So that's definitely a level that will give them what they need in terms of the level of liquidity that they need to pair their orders and unload here, basically to short. Right, so they buy up, and this is looking pretty precarious. Now there's a couple of things about this move here. So what we had on the back of the Bank of Japan raising their interest rates was this capitulation, caused a lot of fear and panic in the markets. Down it went. Down here, investors are piling in at bargain prices seemingly. And of course, a ton of money is injected into this, into the markets. But more importantly, smart money algos pick up on this and price this north. Okay, volume follows it. This is the target for big money to unload up in here with against these buy stops. And we've got the issue with the Fed. The Fed is highly invested in keeping the markets buoyant. Now, we've got unemployment claims coming in on Thursday. Friday, we've got Fed chair speaking. And what people are thinking at the moment is that the Fed being invested in keeping these markets afloat will most likely reduce interest rates in September. Reducing interest rates will definitely give the stock markets a bit of a boost. Okay, so it's cheaper to borrow, and people borrow at cheaper rates. They'll spend, and great for the economy, and people invest in risk assets. The thing about this is just look how far this has moved. Now what I'm seeing with this is that this is already pricing in this expectation that we're going to see a rate drop in September. Now, we've got unemployment claims on Thursday. Friday, we've got Fed Chair Powell. So this is a really big couple of days coming up. You need to prepare yourself and expect a considerable amount of volatility in the markets. It's going to be a wild ride. Given how far this is overextended, and given the fact that it's traded into this liquidity pool, and on the back of the fact that I think this is already pricing into a potential, interest rate drop. If the rates are reduced incrementally, for example, I don't see this pushing up. I see this potentially capitulating, given that it's already been priced in. Okay, if the rate drop is more significant, that could hold it up, and we see this move further north. Maybe we get a slight pullback and we're off to the races. Okay, so there's two scenarios, but I'm leaning more towards this thing having quite an aggressive pullback. Now you've got a couple of things going here. If we go down to the 4-hour time frame, just have a look at that. Yeah, I mean, look, it's really long in the tooth, this trend, seriously. Okay, we're heading into the end of the week, and generally at the end of the week, in most cases, you're going to find big money will push the markets into liquidity, right? So talk about liquidity. It's seeking liquidity. Whatever the markets do, it's seeking liquidity. That's just the main function of the markets, right? So you've got to look at this from a liquidity standpoint. Where is it? It's resting above these highs, above here. It's already tapped into it. So, is it exhausting this liquidity pool at the moment and giving smart money, what they need to be able to pair their orders for a pullback? And, okay, if this liquidity pool up in here is taken out, where is the next port of call? Well, it's going to be all the sell stops that are sitting all through here. Right, so this to me is looking really precarious, and I'm expecting a pullback. Right, and again, depending on this proposed rate cut, and if it's slight, this could really tank. If it's significant, well, it could be a bit of a pullback, and then we're off to the races again. Right? So we don't know. This remains to be seen. I guess what I'm trying to say here is be super careful. I wouldn't be buying into this. Look, it could rally further. I'm not interested. I don't want to get involved long at the moment. But I tell you what, if this thing pulls back, and I'm thinking a decent pullback, let's have a look and see on this time frame what we've got in terms of, yeah, well, the other thing the market's looking for is an imbalance, right? So down here, okay, we've got a 4-hour bullish imbalance where this is traded one-sided bullish, and we have this thin candle. So that's a potential target. We have this imbalance. Well, that's been kind of traded into, and then we have on the 4-hour time frame. Then we have where's my box? I've lost my box. All right, guys, it's a bit late. There we go. All right, so we've got these two thin candles here making up this gap right there. All right, so that's a potential target 1 for a pullback, a possible target 2. I mean, this could really tank, guys. So just be careful. So look, what I'm expecting is price to possibly range here for a bit. You might see a bit of a spike above and below the range, and then I'm expecting an imbalance set up here, like this trades off with speed, and if that happens with a spike above this range, that could be gearing up then for more downside. So that's the kind of price action I'm going to be looking for, more like that. And then possibly the first move I would expect would be the range sideways, and then a bit of a fake out to draw in sellers. More stops go in above, they hit those stops, and then we see it move south. Possibly, this is hypothetical at the moment. I'm not going to be buying into this level. I'm looking for this to show me that it wants to move south. And Friday, do you really want to get involved in the markets? But possibly next week, I don't know. Have a look at it and see how it shapes up, guys. And then that could be an opportunity. But look, it's a very difficult market to trade at the moment. And, on the back of this move recently, triggered by the Bank of Japan, markets have really, gone into a chaotic mess. And it's not easy trading, so just be really careful. Trade with small position sizes, manage your risk really, really well. That's my take on the NAS100. I hope you've gained something from the video. I'd really love to hear your comments, so definitely leave a comment below, share your thoughts, and with that, I hope you have a great day, safe trading, and see you in the next one.